Hey everybody, Smart Silver Stacker here. Hope you're doing well. A variety of factors have come together recently to create a perfect storm for the precious metals. And a lot has happened in the gold and the silver market over the course of the past couple of days. The silver price has risen to the highest level in 14 years. It's above $42 now for the first time since 2011. We've seen gold rip higher to new record all-time highs. So I want to take a look at the charts and examine this price action, but also look at some of the factors which are coming together to create this tremendous bull market in the precious metals. So let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at stbullion.com/IRA. All right, so here's the 4-hour chart of silver, and you can see right now we're still above $42 an ounce. Earlier in today's session, in fact, it was overnight trading, we saw the silver price hit $42.45. That is the highest price since 2011. And this move up that we've seen over the course of the past 2 days is representative of a breakout from another one of these consolidation patterns. Dating back to the end of August, that was when silver first broke $40 an ounce. That's this white line here. The price continued to rise, but then it traded sideways for about the past 2 weeks. We saw this consolidation, and this is very much in line with how this bull market in silver has been playing out. We just got another breakout, right? It's like a staircase. We get a flag pattern like this one in yellow, then a break higher. There's your flag pole. Then we get a pennant. Then we get a breakout. Here's another flag pole. And at this point, I suspect we'll probably see another consolidation, something like this. And then sooner rather than later, we'll get another break higher. And I'm sticking to my forecast that we may very well see $50 silver in September this month. If we don't see it in September, I think by year end, $50 silver is a no-brainer. Now, of course, anything could happen, but that's how I see the probabilities skewing at this point. When we go over some of the factors that are contributing to this significant increase in the price of both gold and silver, I think you'll understand why that's my forecast. Now, taking a look at the chart of gold, we had gold, and we've talked about this in previous videos, break out at the end of August, just around the same time that silver was crossing that critical $40 level. We had gold break out from this sideways triangle symmetrical consolidation that it had been trading in since April. Now, that's a very bullish development that it broke out of this consolidation, and it has moved considerably higher since then, rising to new record all-time high prices. We recently put in gold spot price a high of $3,674. Now, in the gold futures market, we can see the chart of that here. This green line is the $3,700 level, and you can see that gold futures actually broke that level. They went as high as $3,715 back on Tuesday, September 9th. So we've seen some very notable price appreciation for both of the metals. Now, when it comes to gold, the gold chart looks like it was also in one of these flag consolidations, and it broke out of it yesterday. At the same time, silver was breaking out of its consolidation pattern. So both metals are proceeding in this sort of similar way, where you get consolidation, then a significant run higher. And I believe it's only a matter of time before we see new nominal all-time highs for silver. And I believe if you use the CPI, gold has actually now taken out its inflation-adjusted all-time high from back in 1980. Now, I suspect that in reality, if you're using a better measure of the CPI, the inflation-adjusted high is still significantly above where we are, although that's where we're headed on the gold price. And these charts, I mean, if we get a little correction, a little sideways trading, I would view any dip that we get here as a buying opportunity, not financial advice, of course. Now, getting into some of the factors that are contributing to this run up in the price of gold and silver. In the last video that we did a technical update, we talked about the upcoming jobs number revision, and it turned out to be bigger than expected. We had the Bureau of Labor Statistics on Tuesday reporting revisions for the period ending in March, 12-month period, so March 2025 going back to March 2024, and they actually revised those jobs numbers down by 911,000. So almost a million jobs reported that never actually existed in the first place. Now, at this point, I don't even know why they bothered to continue reporting employment numbers when the data is clearly so inaccurate at the date of reporting. Well, I know why they do it. They do it to paint a rosier picture about the economy than actually is supported by reality. It's just jobs number propaganda. We'll just report a bunch of fake jobs because we have these models that model in jobs that don't really exist. And this allows people like Fed Chairman Jerome Powell to go on and on about how the jobs market is so strong, and that's why we don't need to cut rates and stimulate the economy. And that's exactly what we heard from Powell for the past year, was how strong the labor market is. Well, now that it is proving to have all been smoke and mirrors, that is going to give the Fed the room they need to print, and I suspect they're going to print a lot, because a 25 basis point rate cut at this point isn't going to be sufficient to support the collapsing U.S. labor market. Now, I don't really think that stimulating and cutting is going to help the economy in the long term anyway. It's just going to inflate the currency, although it might give us a little short-term assistance, but it's likely to debase the dollar and increase the price of the precious metals significantly. So that's why this jobs number is so important. Now, we also got some inflation data earlier this week. We had the CPI rise 2.9% year over year for August. That is the fastest year over year increase in inflation since January, slightly hotter than expectations. And yet, despite that, there's no evidence that the Fed is going to look at delaying their rate cuts. And you can see here on the CME FedWatch tool that currently markets are anticipating a 94.5% chance of a 25 basis point rate cut, a 5.5% chance of a 50 basis point rate cut. Now, you might recall in the last video that we were doing the technical update, there was at that point no chance factored in of a 50 basis point rate cut. And I suggested that weak jobs data moving forward could skew the needle towards the odds of a bigger rate cut. And I think there's a very strong probability that that might be exactly what we are going to get this September. Now, even if we only get the 25 basis point rate cut that the markets are anticipating, that's still going to be very bullish for the metals because it's going to be the first of a series of rate cuts. But if we were to get the outlier, the 50 basis point rate cut, that could really light a fire under the price of gold and silver here. And we've got all of these factors coming together. We have rising inflation. We have a deteriorating U.S. labor market. We have a Federal Reserve, which is being maneuvered into cutting, into easier monetary policy by the current administration. And we also have a tremendous amount of geopolitical tensions that are developing and which are all contributing to safe haven demand for precious metals and also to risks for the US dollar. There's a lot of factors that are coming together all at once here. Let's get into the geopolitical aspect of things. So we recently had the US destroy what they called a drug boat that was off the shore of Venezuela. 11 people were killed in that strike. Now, according to this article in the Economic Times, we've got Venezuelan President Nicolas Maduro, who the U.S. State Department has put a $50 million bounty on, is urging his citizens to prepare for a possible armed struggle to defend sovereignty and peace if tensions with the U.S. escalate further. Now, this sounds like a lot of fiery rhetoric. I don't expect there to be U.S. boots on the ground in Latin America anytime soon. However, I would not be surprised if this conflict escalates and we see more strikes and more military involvement in the region. The Middle East also is on a downward trajectory at the moment. Egypt, here in this article from the Jerusalem Post, deciding to reduce coordination with Israel following an airstrike in Qatar. Now, Israel conducted this airstrike, I believe it was to target alleged members of Hamas who were taking shelter in Qatar. You might remember that Qatar was critical in terms of the peace deal that was reached in the recent Israel-Iran war. The Trump administration, they used their relationship with Qatar to help facilitate a peace deal between Iran and Israel, Well, following these airstrikes, the odds of them coming to the table in any future peace deal is declining significantly. We have also got a situation in Eastern Europe with NATO scrambling jets this week to shoot down Russian drones over Poland after Russian drones violated Polish airspace. NATO forces actually shot down some Russian drones. So this is a major escalation. Will this be used as some kind of casus belli? It's very possible. And we had the president with this ominous message on his Truth social media platform, writing, "What's with Russia violating Poland's airspace with drones? Here we go." And a lot of people on the blogosphere, on the interwebs, were comparing this line, "Here we go," to George Bush's famous "Let's roll" line, and suggesting that this may mean an imminent escalation of hostilities with Russia. It sounds like the peace deal, the Alaska summit, all of that is out the window now, and tensions are going to continue rising between NATO and Russia. We've got the Chinese sailing a new aircraft carrier through the Taiwan Strait for the first time. This is a multi-theater conflict which was breaking out. We've got conflict in Latin America, conflict in the Middle East, conflict in Eastern Europe. Now we have conflict in the South China Sea between China and Taiwan. We're seeing continued escalations there, and the stage is being set for a major global conflict here. We recently had China with their significant Victory Day parade. They had a massive military parade celebrating Victory Day. We had them displaying all of the various aspects of their nuclear triad. Here you can see they had some nice nuclear missiles on display in this parade. Donald Trump was very incensed by this display militarily. This does little to de-escalate tensions between the U.S. and China. This following the Shanghai Cooperation Organization meeting, which recently took place. And here in this image, it's a little blurry, but you can see there's Xi in the center. And who's right next to him? Putin. And then two more people down, you've got Modi, the PM of India. Now here are some images of Modi and Putin hanging out, and this is pretty significant because you take China and India and throw Russia into the mix as well. That's more than 40% of the world population represented, and this is somewhat ominous to see these countries coming together at the SCO. It represents a significant resistance to U.S. hegemony in their respective regions of the world, and I think it's important of things to come. So the geopolitical situation could hardly be worse, although it may well get worse in the near future. This is coinciding with the U.S. national debt exploding to nearly $37.5 trillion here. We're on a trajectory to likely hit $38 trillion before year end, and this number is not slowing down anytime soon. So it's no accident that you are seeing the U.S. economy eroding, the Fed about to embark on a major program of liquidity creation and money printing, the geopolitical environment declining significantly around the world. All the promised peace deals that we heard about, those have all vanished. Poof, they're gone. We also have a looming massive unpayable debt crisis here in the U.S. And for all of these reasons, the precious metals are breaking out. In the case of gold to record all-time highs, in the case of silver to the highest level in 14 years, very soon to be on to new record nominal highs in silver. Leave me a comment down below to let me know what you think about the topics that we covered in today's video. It's a good time to be getting prepared, good time to be stacking. Even though the metals are getting a little pricey, they are going to be getting a lot pricier, and if we do get a pullback here, it will be an opportunity to enter these markets. That's how I'll interpret it. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.